Hi, I'm Scott Mentzer, broker owner at Orchard Hill Mortgage, and this is your weekly mortgage update. Okay, let's jump right in and let's take a look at what happened last week with mortgage rates. Average mortgage rates improved a bit further last week with consumer inflation data coming in that showed inflation was moving lower, as economists had forecast. Although we didn't see a big drop, the small improvement was welcomed, with rates much lower than the highs near the end of 2022. Okay, let's take a look at this week's rate forecast. This week, mortgage rates are likely to be relatively unchanged, with some small day-to-day movement, but not any big moves for the week. Mortgage rates are likely to hold near current levels this week and next week ahead of the Fed meeting at the end of the month. Okay, let's take a look at what's affecting rates this week. There are two main factors there: economic data and the Fed. So let's look at economic data. Wholesale inflation data comes in on Wednesday, and economists are expecting wholesale inflation to be cooling alongside consumer inflation. Also on Wednesday, the retail sales data comes out, and if it shows spending is falling, this would help support lower mortgage rates. The Fed. Current mortgage rates are based on the speculation that the Fed policy rate will peak at 4.75% by March. If markets start to believe that the Fed will raise the policy rate higher based on strong economic data, it will pressure mortgage rates higher. Okay, I want to take a look at the news this week in the real estate and mortgage world, and the first headline that caught my eye was single-family home price growth slows, echoing sales downturn. And at first glance, you might think that's not the best news, but when you delve into this article and you look at what they're actually saying, sales prices in quarter 4 of 2022 rose at a rate of 9.2%. So yes, it was down from the previous quarter from 13.1%, but we still had growth. And I think that is a good sign for the real estate market. Prices are holding steady, still increasing, not increasing at what the rates were or prices were previously, but we still have an increase in prices. So I think that is good for the mortgage and real estate market. The other article I wanted to look at was home builder sentiment rises in January for the first time in a year, thanks to lower mortgage rates. So this article is based on a survey that was done, and they polled home builders, and what they're saying is that builders are feeling better, more confident about 2023, and that confidence has risen for the first time in 12 months. So they didn't feel too good about what was going on before that, but now because of mortgage rates getting better, coming down for the first few weeks of January, mortgage builders have confidence that they feel that this will be a good indicator of the building market for 2023. So I think that's good news there, and I think that should help with mortgage rates coming down. I think it should help our buyers to get back into the market, to jump back in, and with the other one of prices still rising. But I think there's a stable market now, and I think hopefully things will look up for 2023. So just a couple news items. Well, that's all for this edition of the Mortgage Update. If your buyers have questions, want to find out how to get pre-approved for a mortgage or how much they qualify or how the current rate situation affects them and their unique scenario, please have them contact me and we can schedule a phone call, a meeting in person to help them with their mortgage and real estate needs. All right, till next week, it's Scott Mentzer. Thanks for watching.